So on my end, all I can do is to give you your daily dosage of confirmation bias. Oh, sorry. I mean, to give you an objective viewpoint of how I look at the Chinese market. Hi, Chiking. I'm not sure if I'm the only one. I'm getting frustrated with Baba's stock price. Even a good earnings can't raise sentiments. So is it sentiments or is it just manipulated? If we say the market is efficient, I don't get it. Sigh. Sorry. I don't want to share with my friends because I don't think anyone can understand how I'm feeling and it feels like whining. So I've received this message from one of the followers on Twitter, and I think this actually calls for a great deal of concern, especially for many investors. I think a lot of us are in the same boat, and many of us are probably thinking in the same direction. So I think I just wanted to acknowledge this fact. It's probably perfectly normal to actually feel this way. In fact, I would be lying if I say that I don't feel a certain amount of regret, frustration. You insert your vocabulary here. But I think the biggest question we should ask ourselves is, why are we feeling this way? So I think the most intuitive explanation is really this idea of between expectations versus reality mismatch. So in this specific scenario, we can't change the reality. So let's try to investigate what's the differences and what are the nuances between the expectations and reality. So when I reflect back, maybe I can pose this question to most of you out here. So what was your initial expectations when you first entered into Baba stock? Were you expecting an easy double? Were you expecting that, hey, this is an opportunity of our lifetime? Or were you going in with the intention that I'm going to invest for the long term, I'm going to own this company, I want to have a business owner mindset. I think Alibaba is a phenomenal company, I want to stay on the course with it. So just take some time, feel free to leave in the comment section down below as well. What do you think of it? So I think the real reason here is that many of us entered the trade. I use this word very specifically, trade, because we actually don't adopt the business owner mindset. None of us came in thinking that we'll be stuck with this position for so long. I think that it's quite interesting as well for us to have this specific thought. I think there are many factors at play, and one of the most important factor that I've kind of figured out on my own was that when I have conversations with many of my fellow friends that also have an Alibaba position, so many of the complaints and lamentation go something along this line. So they're saying that, oh, look at the S&P 500, it's up 20-30% from its all-time lows. Or you can even include any specific stock name, include maybe Tesla, Palantir, Nvidia. A lot of us like to compare our positions with some of the rising stars in the market today, and then you definitely feel lousy because I think on a year-to-date basis, Baba is flat or even negative, while the rest of these companies, even Meta platforms, it's up like 50, 100, 150%. And then you go into the rabbit hole thinking that, oh, look at the opportunity cost that I've lost, look at the amount of money that I could have made if I didn't buy into Alibaba. So that is when a lot of all these concerns will start affecting your mindset. And more importantly, most of us just don't want to feel stupid. And I think in some occasions, people might even laugh at you for owning XXXYYY stock. So some out there might not have the conviction, but yet at the same time, they don't want to sell out at a loss, which is why you're stuck in this predisposition. Now, circling back to the topic of opportunity costs, I think this is a real concern. I'm not gonna smoke my way through and tell you that, oh, opportunity costs don't matter. But I think in the grander scheme of things, you really need to have a proper framework to evaluate and to understand the idea and the rule of opportunity costs. Because at the end of the day, you need to understand that no two stock is similar, and people might say that, oh, I think that the risk level between Alibaba versus Tencent is the same, but in reality, it's not. And when you start making the comparison of, oh, look at Palantir, it's at 100+% year to date, while Baba is like down on a year to date basis. And then you go through the comparison, you have to understand that the risk level of both individual companies is dissimilar. Yes, it's dissimilar. So if you're really on the mission to try to chase for the highest return, there is no one way to win the game. Don't forget, in 2022 last year, all the big tech companies essentially were decimated. And this year, they were one of the up and rising ones. Nvidia, Meta, Amazon, Microsoft, all of them had great runs. So unless you are able to perfectly time the market, when they are down, you manage to scoop out at the bottom. When they are up, you manage to take profits. If not, this is really not a game that you want to be in. Now, back to the framework regarding opportunity costs. The concept of opportunity cost is a very airy, very fluffy concept. I'm not saying that it's not useful, but I think you need to ground it in reality. So my own framework, if I can share, is really this idea of a hurdle rate. Or in this case, simply put, your expected rate of return. So for many of you who actually pick individual stocks, you probably will do your own valuation work, your fundamental analysis, your technical analysis and whatnot. And when you really come to the idea of trying to determine the intrinsic value of a particular company, you will use inevitably a discount rate, and then apply a margin of safety on top of it. So really the idea of having a hurdle rate is to tell yourself that, hey, at least on my portfolio level, I'm not going to include a new investment unless I'm able to calculate a margin of safety or intrinsic value that is so low that is able to deliver X amount of returns. And in this case, many people like to put 12%, 15%, 18%. Some even strive for 20%. But don't forget, by having a higher hurdle rate, you are probably restricting your access to many investments because, to be very, very honest, if you really believe that the market is largely efficient, it's really, really hard for you to find all these kind of companies that is able to compound at 20-25% CAGR for a long period of time. So that is why by setting up this arbitrary benchmark level, let's say at 15%, if the companies actually do fall short, you still have a margin of safety because we do know that index probably return around 8-10%. And by putting in the homework, putting in the effort to stock pick, you probably want to beat the index. So this is the kind of safeguards that you want to include when you pick individual stocks and when you add them into your portfolio. So rather than really thinking about this airy and fluffy opportunity cost, how much I could have earned, how much would I have lost, how much could I have potentially earned more when I allocate to X or Y name, I think looking at crossing your own personal hurdle rate would be much more effective on a portfolio composition level, or at least on a portfolio strategy level. And last but not least, don't forget that there are many times where it does not make sense in the stock market. So the stock market is essentially an aggregation tool, and it's essentially aggregating market psychology. And all the market participants, most of them are like you and me, and we are all emotional creatures, which is why like many a times, if you guys still remember the GameStop saga, a lot of your unprofitable EV companies all went to the moon. A lot of people also have been leaving in the comment section, oh, you definitely cannot make money with Chinese stocks. I think the ironic thing is, at least for now in my portfolio position, I do own multiple different Chinese tickers. I have Alibaba, I have Tencent, I have KWeb, I have Chinese banks, I have Haidilao. And out of the different positions, my KWeb is slightly in the red, my Baba is deep in the red, while the other three positions, I'm actually currently in the green. So it's fairly interesting that a lot of people constantly have the idea that, oh, Chinese stocks are uninvestable and you can't make money on Chinese stocks. So I think as long as your fundamental thesis is right, I do believe that patience do pay, but maybe not now. So on my end, all I can do is to give you your daily dosage of confirmation bias. To give you an objective viewpoint of how I look at the Chinese market. And I think having a different perspective in this extremely crowded market is probably something that you need to keep yourself sane. Especially when every single other Tom, Dick and Harry YouTubers are probably anti-China, especially a lot of your American creators. I hardly see anyone so ridiculously optimistic and positive after a 2-year drawdown. So all else said, we are in no position to move the markets unless it's like penny stock or something. But if you're really looking at large cap, it's really the different institutional funds, smart money that are moving the markets. And at least in the short term, this remains, or at least Chinese tech remains to be one of the most heavily beaten down sector. What we can really do as investors is to constantly restudy our position, reaffirm our conviction, and if really this is keeping you up at night, I think selling out of the position would be a better course of action rather than constantly complaining. If not, for those of you who still have a very strong conviction in the fundamentals of Alibaba and you trust and you believe that they're able to continue delivering on the bottom line, actually, if you think about it, having a low share price is better because they're able to retire more shares. They'll be able to allocate their capital much more effectively. So I think everything is about perspective and what your expectations were when you first walked into it. So feel free to disagree in the comment section down below, and I'll see you in the next video. But more importantly, I will finally see you on the moon. Goodbye!